It's time now for a look at the day's top business news, and for that I'm joined in studio by France 24's business editor Brian Quinn. I think you're starting this morning for us in Brussels, Brian.
Well, Sharon, French President Emmanuel Macron and German Chancellor Olaf Scholz are having breakfast this morning to try and sort out a key disagreement between their two governments. In early March, Berlin revealed a last-minute objection to the EU's upcoming ban on the sale of new internal combustion engine cars after 2035. That, of course, one of the EU's key climate policies. The automobile sector is critical to the German economy. As of 2021, it represented some 436 billion euros annually, cranking out around 2.8 million cars per year and supporting some 3 million jobs. Germany now wants the EU to continue to allow the sale of internal combustion cars as long as they run on e-fuels. Now, these are flammable liquids similar to refined petroleum, but instead of being pulled out of the ground, they're made by synthesizing captured CO2 emissions with hydrogen produced via renewable electricity. Now, e-fuels are a relatively new field. The world's first production facility opened in Chile just a few years ago. Right now, there are 18 sites in the world. 5 of them are in Germany. Still, it's already an 80 billion euro market with 1.2 million jobs here in Europe. Germany, of course, not alone in pumping the brakes on the EU's upcoming internal combustion ban. Italy, Poland, and Slovakia, among others, have also expressed concern. France, though, doesn't want to lose momentum on the greening of the continent's auto industry, an ambitious transition that will mean producing 12 to 13 million all-electric vehicles per year. EU Commission Chief Ursula von der Leyen says the compromise is in the works. Here she is.
The negotiations are progressing. This is the will, there's the will on both sides to resolve this topic and to resolve it within the scope of the provisional agreement that has been found between Council and Parliament. And of course, this includes the scope of the provisional agreement, technology neutrality. I just wanted to mention that time is of the essence in this case, as this file is an important pillar of our Fit for 55 package, and therefore we intensify the talk.
Well, let's get a check on the day's trading action so far. Asian indexes in the red on Friday amid ongoing turmoil in the banking sector. The Nikkei in Tokyo closing with the mildest of losses as new data shows Japanese core inflation slowing for the first time in 14 months. Here in Europe, markets opening in negative territory as well, with bank shares leading the way down. Interest rates remaining at the front of investors' minds. 0.25% hikes from the U.S. Federal Reserve and the Bank of England this week are keeping up pressure on long-term bond holdings. That, of course, a key driver of weakness on the balance sheets of regional banks in the U.S. On Thursday, U.S. Treasury Secretary Janet Yellen told lawmakers that expanding deposit insurance to guard against bank runs at these regional banks would require congressional action. The Bank of England, meanwhile, warning UK companies not to raise their prices if they want to avoid even higher interest rates. Investors worried that the hikes are not over.
So there will be interest rate rises, and obviously these interest rate rises will be affecting stock markets. As interest rates increase, that means that the prices of bonds, especially longer-term bonds, will decrease, and the prices of stocks may also reflect this higher interest rates.
Finally, for business, Hindenburg Research has released a new report on Block. That's the payments company led by Twitter founder Jack Dorsey. Hindenburg says Block overstates its user numbers and understates its customer acquisition costs, and that it caters to criminal groups helping to facilitate fraud. Originally called Squared and known for its small white card readers, Block was co-founded by Dorsey in 2009 as a disruptor in the credit card market. It's now worth some $30 billion. Hindenburg is an activist short seller. It seeks out corporate fraud and bets against a company's stock price as it releases its reports. Earlier this year, Hindenburg helped to wipe out more than $150 billion in market value from India's Adani Group, with a report alleging decades of accounting fraud and market manipulation. Block has called the latest report inaccurate and misleading and says it's exploring a legal action block shares down, way down actually, in Australia this morning, Sharon. So obviously that report already having some effect.
Okay, thank you for that, Brian. That's Brian Quinn, our business editor, joining us there with the latest news from the world of business.